Yes, good evening, everybody.
Good
We
evening,
are
sir.
welcome to class once again. Yes, we've been talking about variance over time. Variance is a very wide one, and the more we solve, the more we get exposed, and the more we get knowledge and understanding. Yes, that is one thing with variance. So the more you solve, the more those formulas becomes part of you, and you might not need to cram as much. Yes, so let's keep solving. Yes, I'm moving very fast because a time will come. I will not have class again. I want you to be doing revision. So that is why we are moving in this space. So that you have time and do your own personal meditation, which is very important. That is one thing with ICANN. It's what you know that you write in the hall. Yes. No matter how I show my dexterity, my skills, it's your understanding and what you put down in the exam hall that matters. So that is why we'll, we'll go like this. Then maybe by October, we'll have everybody will go on their own and study. Though we'll still be communicating on the platform, but I'll still be monitoring everybody and be doing follow up. Yes, so that is why I want us to at least let's cover up to a reasonable extent so that you have confidence to write these exams with prayers and God's grace. Yes, because it's when you know how to pray very well. But when you don't know what to write and you're trusting God for miracle, it will not work. So you have to walk. When you walk, your prayer will be well rooted. So tonight we'll be talking about budgeting and budgetary control. This is not a strange topic. It should be a familiar one. As a matter of fact, everybody make budgets. Either you are a civil servant or you are a business person, you make a budget. It can be your personal budget, it can be your business budget. So before I go ahead, I know you have residual knowledge of what budget is. So what is budget? Let me behave like those primary school teachers that will ask and come to class and ask questions. Yes, what is budgeting? Yes, we can talk. I will not call name so that I will not offend anybody. Yes, when I call name now and somebody is not happy, I'm calling his or her name. So, but just express yourself. Feel free, please.
Let me try.
All right.
Budgets are quantified plans that is made by management, and they do such plans in order to achieve, okay, within a given period of time. Let me come again. A budget is a quantified plan of action that is carried out by management, and in order for them to achieve a plan within a given period.
Okay. All right, ma. All right. Thank you.
Please let me say, budgeting is a process of creating plan, that is just making plan on how to manage your finance or your resources within a space of time, maybe corporate, corporate one or individual.
Okay, sir. Yes. By the virtue of the fact that you're in this class, you're no longer a layman, sir.
Okay, okay, it's okay.
You're on the way to becoming a professional. Yeah. So budgeting is um is a process of planning and controlling how resources especially financial resources, how they are allocated and spent within an organization or household or on a particular project. So it involves setting financial goals, such as estimating future income and expenses, and creating a plan to manage the spending within the available limits. When you make a budget, you're making a budget of income, revenue, and expenditure. How you're going to generate income to finance those projects. So the essence of budgeting is for decision making and to see how we can prioritize results and to see how we can evaluate our performance. That is why the issue of budgeting and variance go hand in hand. It is when you make budgets and you execute your budget, you cannot evaluate your performance to see if there is tandem between your budget and your performance. When there is deviation from your budget, then you have variance. So budgets can be defined as a plan quantified in monetary terms. A plan quantified in monetary terms. And it must be prepared and approved period to a defined period of time. And these budgets, as I've said, shows planned income to be generated and how expenditure will be incurred during that particular frame of time. So in Nigeria, we run a budget of 12 months. But if you work in the civil service sector, you discover that our budget is exceeding 12 months now, going beyond 12 months, because as at today, we are still running 2024 budgets, which is expected to be run side by side with 2025 budgets. So a budget can also be seen as a future plan of action, which can be formulated by an individual, by management, for the whole organization. For the whole organization. So there are many stories under budgeting. Let me see. There are so many stories under budgeting that we have to know. Yes, that we have to know. That we have to know. We have benefits of budgeting. As in, why do we have to come up with budgets in organization? Why do we have to come up with budgets? One is for the essence of planning. As you make budgets, you plan. Now, when you talk about planning, the chapter 1 of the ICANN study pack, yes, though it's gradually to phase out soon, but most of those words is just an addition that will be added to the study pack. You will see strategic objective in the first chapter of the ICANN study pack, where they're talking about goals and strategies. So all these objective, all these goals, strategy, tactical plan, they are all working towards the achievements of the overall budget of the organization. So the benefits of budgeting include, it helps in planning, it helps in coordination. If you don't have a budget, an organization will be run haphazardly. But when you have a budget, you have a ceiling on your expenses, on your electricity, you have a limit, a ceiling on it. On your furniture and fittings, you have a ceiling. you'll be coordinated within that limit, within that framework, that you mustn't spend frivolously on things that you've not made plan for. So budgeting also helps in control. It helps to guide on how we spend our finances, even as a nation, as a person. When you have a budget, you will not want to go outside what you've put down. So when you're going outside your stipulated budget, it means you are not being controlled by the framework that you set. So budgeting helps in control. And one thing with budgeting is a complex paperwork that have to be delegated. Nigerian budgets, only the executive arm cannot implement it. The executive arm has various sectors that are aiding the implementation of the budget. Various parastatals, various ministries, departments, and agencies. So budgeting aid in authorizing and delegating duties to people. When you have a budget and you see how cumbersome it is to achieve this set plan or target, hence you discover there is need for delegation of authority. There's need for delegation of duty. If not, when you put everything on your head, someone might not find it easy. So budgets calls or necessitates for authorizing and delegating of authority, and also it helps in evaluation of performance. It is when you have a plan, a target, then you now compare your actual with your target. If your actual is not in conformity with your target, it shows you need to improve. It shows there is a drawback somewhere, there's a loophole somewhere that you need to guide against for future purpose. So it is when you evaluate your performance, you can be able to attest that this is where you are and this is where you ought to be. So where your budgets and your actual are not at par, shows there is a variance. So budgeting helps one to evaluate his or her performance in relation to set targets. And budgeting helps in communicating and motivating. So when you have a plan, one can be motivated if the plan is achieved. And when the plan is not achieved, someone can get demoralized. So it is when you have a plan and you work towards that plan and you achieve it, then you'll be happy to do more. You'll be happy. And even the organization can motivate you, because most organizations work based on performance. When you achieve your performance as a salesperson within a month, there are certain ways organization can motivate you. They can put your picture in the reception. That is it staff of the month, staff of the week. They can motivate you financially because the budget has been set and you achieve the budget or you even surpass the budget. So it's a way of measuring performance. So once you have budget, these are the benefits. But where budget does not exist and we just work in an open window, there will be no yardstick to measure our performance. So there are quite a number of benefits of budgeting that you can think of. So as I said, there are many stories under budgeting that there's what we call budget manual. And when we talk about budget manual, all these are also in PSAF. Those offering PSAF, you'll be discussing these in public sector accounting and finance likewise. So the budget manual is an instruction or information manual about the way budgeting operates in a particular organization. From the word budget manual, it shows is a guide, is an instruction on how budgets operates in an organization. So in the budget manual, there are quite a number of things that you can find there. The objectives, explanation of the budgetary process can be seen in the budget manual. The organization structure and responsibilities will be seen in the budget manual. And the main budget and the relationship, how the budget will be developed. You know, in most organizations, we have what we call the budget committee. The budget committee. These are those that will sit down and see how the budget can be developed and coordinated. So maybe I'll share some of the write-ups with us. My main focus is on the calculation. Yes, it's for us to get the calculation. That is my main focus. Now, how do we prepare budgets? What is the determinant of budget in a manufacturing organization? Yes, that will be our focus. For you to prepare a budget in a manufacturing organization, what is your determinant? What will you be looking at in a manufacturing organization? Number one thing that determines our budget preparation in a manufacturing organization is sales budget. Sales budget is the key determinant of every other budget, because we have sales budget, we have production budget, and also we have labor budget. We can have things like master budgets and so on and so forth. But in a manufacturing organization, the determinant of other budget factor is the sales budget. The sales budget. It is what you plan to sell. Please take note of these informations now. It is what you plan to sell that will determine what you will produce. It is what you plan to sell that will determine your production budget. And also, it is your production budget that will determine the quantity of material that you need. It is your production budget that will determine the number of laborers that you need. It is your production budget that will determine the labor hours that is required in an organization. So it's a step-by-step issue. Sales budget will lead to production budget. Under production budget, you begin to talk about the raw materials required for production, the labor hours required for production, the factory overhead, such as electricity, factory space that you need for production. So without the sales budget, every other budget factor might not be able to stand. And that is why it is a principal budget factor. It is a principal budget factor. That is the sales budget. So the sales budget is a comprehensive data which is used essentially for planning and controlling revenues for many organizations. So the principal budget factor, as I've said earlier on, is the sales volume or the sales budget. So the sales budget, being the principal budget factor, is the primary budget from which the majority of other budgets are derived. So it requires strategic planning. Strategic planning. We have various forms of plan. We have strategic planning, and also we have tactical planning. The strategic plan is for the board of directors. Tactical plan is for the middle level managers. Tactical. Middle level managers. If you read the chapter 1 of the study pack, you see some of this playing out in the chapter 1 of the study pack. In case you've not even take your time to go through the study pack, try and and read every topic we're treating. Try and read through the study part too. It's very important because it's a primary icon material. Yes. So try and go through them likewise. So the subject matter of this class is on calculation. Yes, is on calculation. So I will use a simple example to illustrate budget in a manufacturing setting. Then in another class, we use a question in the icon pathfinder to illustrate cash budgets. Yes, cash budgets and cash flow statements. Then we'll also use a question in the pathfinder to still solve for budgets in a manufacturing sector. Yes. So I'd like us to look at, yes, solve two questions. So I want to present this question, which I forwarded to the platform. This is a very simple question I will use to explain budget in a manufacturing sector. Then after this, I will now present a question as an assignment that you need this knowledge to solve. So can somebody read? Let's see how we can explain this. It's on the WhatsApp platform in case this is tiny. Yes, can somebody read?
Okay, let me read, sir. Hello.
Yes, I'm with you.
Good evening, sir.
Good evening, ma.
Well done, sir.
Thank you.
Okay. The XYZ company produces 3 products, X, Y, and Z, for the coming accounting period. Budgets are to be prepared using the following information. Product X has 2,000 units at 5,100 each. At 100, I guess that's dollar sign, right?
Yes, very fine. Yes.
Product X, 2,000 units at $100 each. Product Y, 4,000 units at $130 each. Product Z, 3,000 units at $150 each. Standard usage of raw materials. We have wood and we have varnish, and it is calculated, is done by a kg per unit for wood and then liters per unit for varnish. Product X for wood has 5 kg per unit, and then varnish has 2 liters per unit. Product Y has 3 kg per unit for wood, and then product Y has for varnish has 2 liters per unit. Product Z has 2 kg per unit for wood, and then for varnish in liters is 1. Standard cost raw material is $8 for wood and then $4 for varnish. Inventories of finished goods. The opening inventory for X is 500 units, for Y 800 units, for Z is 700 units. Closing inventory for X is 600 units, for Y is 1000 units, and for Z is 800 units. Inventories of raw materials. The opening inventory for wood is 21,000, for varnish is 10,000. Closing inventory for wood is 18,000 and then 9,000 for varnish. Labor, standard hours per unit for X is 4, Y 6, and Z is 8. Okay, for years per unit. Then labor is paid at the rate of $3 per hour. Required, prepare the following budgets. Sales budget in bracket quantity and value. B, production budget in units. C, material usage budgets in quantity. D, material purchase budgets both in quantity and value. And then E, labor budgets both in hours and in value. Thank you,
All
sir.
right. Thank you very much. So looking at this question, um, is what you should have looked at over time. That is why I forwarded it. You need to understand this is budget sales. Product X 2,000 units at $100 per unit. Product Y 4,000 units at 130 each. That is per unit. Product Z. Yes, so this is budgeted sales now. Standard usage of raw material. They are giving us this. This is the standard usage of raw material, which is a composition of wood and varnish. Standard cost of raw material. You must be able to interpret this. Standard cost of raw material is this. They are now giving us inventory of finished goods. Inventory of finished goods. We have opening and we have closing. I want to make a clear explanation at this point. Oftentimes when we try to teach this, students do confuse this point that why are we making the closing inventory for last period as the opening inventory for the next period? It's simple accounting terminology. I'm saying this because when we start solving, when I bring up the question on cash budget, you discover that the opening or the closing inventory as at 31st December 2024, in 1st January 2025, it will be brought forward as what? Opening inventory. As opening inventory. Why? It's because accounting is continuous and periodic. So at the end of each accounting period, unsold or unused inventory is counted and recorded as closing inventory. So when the next period begins, that same stock is carried forward and becomes the opening inventory for the new period. Take note of that. So that when we start solving, you won't say, why are we bringing the opening, the closing for this last period as opening for the next period in terms of opening stock or raw material? When we get there, you'll see. So this is done because it ensures accurate calculation of cost of raw materials consumed, because the existing stock you have, you don't need to make production for it again. For example, if your budget for this month of July to produce 2,000 units, if your budget is to produce 2,000 units, and as at last period, you have a closing stock of 600 units, it shows that you won't produce 2,000 units again because you have it brought forward. It will reduce your production for this year. Though your budget is 2,000 units, you have a plan to sell 2,000 units, but you have carried forward from last period. It means your production for this period will be reduced by the brought forward from last period. I'm saying this so that when we start solving, you get that understanding that, yes, in July, you plan to produce 2,000 units. That is your plan. But you have some stock in your warehouse, which are unsold. So that will reduce the quantity you have to produce. So the difference between what you have and what you don't have is what you're going to produce, which will make up your production budget. So we have inventories of finished goods, you can see. We have inventories of raw materials, you can see. We have various three types of stocks: stock of raw material, stock of work in progress, and stock of finished goods. So in this case, we have two of such nature: raw materials inventory and finished goods inventory. Now we also have labor, standard hours per unit. It means for you to produce 1 unit, you need of X, you need 4 hours. Of Y, you need 6 hours. Of Z, you need 8 hours to produce 1 unit. How much do you pay for 1 hour? Labor is paid at the rate of what? $3 per hour. $3 per hour. Now the question is this: A, prepare the following budgets. Prepare sales budget in quantity and value. Sales budget in quantity and value. Now, looking at this question now, what is our sales budget? What will be our sales budget? What will be our sales budget? For product X, I'm asking because the answer is already on the screen. That is what I'm asking. The answer is clearly on the screen.
2,000 units multiplied by
2,000 units.
Yes, for product X. For product Y, it's 4,000 units. For product Z, it's 3,000 units. That is the sales budget in quantity. What will now be the sales budget in value? It will be what? For X, it will be 2,000 units multiplied by what? $100. $100. Then you now get the result in value for each of those. So let's show it. Let's show it. We'll show it in that order. Then we'll graduate. Sales budgets. Any question? See if somebody wants to say something. Sales budget, we have the product. Product X. We have a quantity of what? Of 2,000. So the sales budget in terms of revenue, in terms of value, yes, in terms of value will be what? For X, it will be 2,000 multiplied by what?
100.
100.
Then we have it what? 200,000, right? For Y, the quantity is what? 4,000. In value, it will be what? 4,000 multiplied by what?
130.
130.
520,000.
Fine. For Z, we have it as 3,000 in units. In value, to be what? To be 150. So we have it as 450. So what will be the total in terms of value?
$1,170,000.
Total is 1,170,000. 1,170,000 is the total. So this is the sales budget. This is the sales budget. This is the sales budget. Now, it is the sales budget that will lead you to production budgets. The next question is prepare production budget in units. Prepare production budgets in units. Prepare production budgets I should prepare production budget in units. Now, based on what we have from our sales budget, the sales budget shows what? Finished goods. It is what is ready for sale that you will make up your sales budget. Now, from the sales budgets, the unit available for X we are to sell for X is what? Is 2,000. For Y is what? 4,000. For Z is what? 3,000 in terms of units. Now, for you to prepare your production budget, you look at the question. In terms of inventory of finished goods, we can see inventory of finished goods here. It shows we have opening inventory and we have what? Closing inventory of finished goods. This opening inventory was brought forward from previous period. So, are we going to produce 500 as part of 2,000 units? It's already existing. The answer is no. It will be deducted.
No, less it.
The closing inventory you are seeing here is for the end of the period. Is a policy for you not to be completely out of stock, even as at the end of the period. You have a percentage as your closing inventory as at the end of the period. So what we do is to add it up. The concept is this. It is sales minus opening inventory plus closing inventory. You get your production budget in units. Take note, please. Sales minus what? Opening inventory plus closing inventory. You get your production budget in units. Yes. Let's show that now. Production budget. We said the sales budget is the primary or the principal budget factor. It determines every other budget. Now we have three products we have to produce: products X, Y, and Z. Now, from our sales, we have a plan to sell 2,000 units, a plan to sell 4,000 units of Y, plan to sell 3,000 units of Z. Do we need to produce the whole of 2,000? We need to check our store. Do we have any of product X in the store? Do we have any of products Y in the store? Do we have any of product Z in the store? That will determine the quantity we have to produce for that period. Now, we have our sales. The sales unit for X is 2,000. For Y is what? It's 4,000. For Z is what? It's 3,000. So for you to determine the production budget, you less your opening finished inventory. The opening here, see it here, for X is 500. For Y is what? Is 800. For Z is what? 700. So this is it. Opening inventory. Opening inventory. For X is what? For
500.
Y is what?
800.
And for Z is what?
700.
700.
If you like, you can get the results. I don't have the time. The next is to add your closing inventory. Your closing inventory. The closing inventory from the question for X is what?
600.
600 units. For Z is what? For Y, 1000.
1000.
For Z should be 800. So your production budget will be sales minus 500 opening inventory plus closing inventory. So production will be what? This will be what?
21.
2.4.2.
For Y,
4.2.
40.
for Z,
31.
31. So this would be your production budget. It is this production budget that will determine the quantity of labor, of material that you will buy, that you will request for. Any question at this point? Any question?
You are fine.
We are fine, right? So,
I want to ask a
Yes.
question.
all right, ma.
You know, in manufacturing accounts, we start with opening inventory, we add purchases, less closing inventory, then we get our cost of goods sold. In this situation,
That is
you
trading
told me
accounts.
now,
That should be trading accounts. That should be trading accounts. In manufacturing accounts, your cost of production is brought down to trading accounts as your purchases. So in manufacturing accounts, you have things like opening stock of raw materials, you have your overhead, then you have your prime cost, then you have all those items, direct and indirect factory overhead. Then you now come to your trading account. You know, as a manufacturing organization, you will not have purchases. It's what you produce that you are bringing in as the cost of production to the trading account. So the point is this: you can bring your closing inventory first in this solution and bring your opening inventory first, a second. The point you must note is that you are deducting your
opening inventory.
Yes, and adding your closing inventory.
Okay. All right. It's okay, sir. Thank you, sir.
So everybody is fine. So now, this production, we need to produce 2,100 of X, 4,200 of Y, 3,100 of Z. Good. The next question, prepare material usage budget in quantity. Looking at this question, material, what will happen? We have two forms of materials: wood, kg per unit; varnish, liters per unit. Yes. Also, if you look at this, we also have, yes, inventory of raw materials, opening, closing. But the first thing is we need to determine the quantity we need before we now go to the store to check, do we have existing raw material in our store? Based on the production budgets, how many varnish do you need? And how many wood do you need to produce 2,100 units of X? So now, this is it. Product X, you need 5 wood, right? isn't it? You need 5 food and you need 2 vanish. So what will be the implication? It will be 5 multiplied by the quantity you want to produce for wood, 2,100. And it will be what? 2 multiplied by 2,100 to know the quantity of vanish that is required. I come again. For product Y, you need to produce 4,200 units, right? In terms of the raw material, this is the raw material. How many kg of food do you need to produce 1 unit of Y? This is a 3. So 3 multiplied by what? 4,200 will give you the total quantity or kg of food required. For vanish, to produce product Y, you need 2 liters, right? 2 liters multiplied by what? 4,200 will give you the total liters required to produce product Y. Let's now present it in a better way so that we'll see material usage budget. Material usage budget. Let's see. Material usage budget. I'll present it this way. Wood. Then let me come here and say vanish. Now, in terms of our production, for X, you need to produce 2,100, for Y, 42, for Z, 31. So we now have it as this. X, you need to produce 2,100, right? 2,100. How many wood, kg of food do you need to produce 1 X? How many kg? 5 kg. When you multiply it by 2,100 units overall, what will be the kg?
15,500.
10,500.
10,500 kg.
10,500, sorry.
So for vanish, to produce 2,100 units, how many liters do you need?
2 liters.
2 liters. The result will be what?
4,200.
4,200.
Then for Y, we need to produce how many units for Y? 4,200, right?
Yes.
4,200. So in terms of kg of wood, how many kg do we need?
3 kg.
With 3 kg. And you multiply, you have what?
12,600
kg. For vanish, how many liters?
2
2 liters.
The results will be what? Should be 84.
1,004.
And for Z, we need to produce 3,100 units. So how many kg of wood do we need to produce
2
1?
kg.
2 kg. Overall, we use how many kg?
6,200.
So for vanish, it will be 3,1 multiplied by what?
1
1.
Multiplied by 1 liters.
liter.
And the result will be
3,100 liters.
so what will be the total here for wood?
29,300.
29,300 kg. And for this,
15,700
15,700.
liters.
700 liters.
15,700 liters. So based on our production budget, we need this amount of wood, 29,300 kg of wood, 15,700 liters of varnish. Now, going back to the question, do you have any of these in store? Do you have any of these brought forward from the previous period? And in relation to the opening stock, what are the information? Can you see any information regarding that here? Inventory of raw materials.
Yeah.
You can see, right?
Yes.
It shows that in terms of wood, we have 21,000 existing as at the beginning of the period. As at the end of the period, we are having this. We should be having this 18,000 for wood. For varnish, we're having this opening brought forward. As at the end, we should be having 9,000. So now, based on our previous knowledge in these on solving for material, on solving for what? Yes, production budgets. Can you apply that same skills here?
Yeah.
So we can apply that same skills, right? To determine
Yes.
our usage budgets. Or to determine what's here. Let's see now from the question. Yes, material usage budget in quantity. This is it. So what we've done is what we need, the usage. The usage is what we've stopped for. It means we'll be
Please,
using.
is it only usage or usage in quantity? You know, it's in brackets, quantity and value.
Let's see it. This is it, sir. Material usage budget quantity. This is it. We are coming to
Wait,
material.
where is your cursor? That's it.
See, sir. See.
Okay, see. Okay.
We are coming to that
Okay.
purchase. We are coming to purchase now.
Okay.
You know, based on production, this is what is required. Based on production budget. If we are to purchase based on production budget,
Okay.
what will now be the quantity we are to purchase? What will be the quantity we are to purchase? Because we can't purchase all this. We have some in the store, right? We can't purchase all
Yes.
this. We have some existing in the store. So that will lead us to the next question, which is what? Material purchase budget. This is material usage budget we just showed. We just shown. So this will be material purchase budget in quantity and value. In quantity and value. So how are we going to go about that? Material purchase budget. So let's show that now.
Biscuit.
Material purchase budget. Material purchase budgets. So we have two forms of raw materials. We have wood, we have varnish. For wood, we need to use how many? Based on our production, we need to use how many?
29,300 kg.
So we have usage 29,300 kg. For varnish, we need to make use of what? 15,700 liters.
100 liters.
Now, this is what we need to use, but we have some stocks in our warehouse. Inventories of raw materials. Opening for wood, we have what? 21,000. For varnish, 10,000. Closing for wood, 18,000. For varnish, 9,000. So based on our knowledge, what will happen? Opening inventory. Opening inventory of raw material for wood is what? Should be 21,000.
21,000.
For varnish is what?
10,000.
10,000. The closing inventory is what?
18,000.
Of raw material, 18,000. Then for varnish is what?
9,000.
It's 9,000. 9,000 liters. So when you do the plus and minus, you have what?
26,300 for wood.
26,300 kg for wood. It shows we are not purchasing all this. What we'll purchase is what? Is this. Because we have these as in existence, and this is our target closing inventory. So what are we going to purchase is this 26,300 wood for that particular purpose of production. For varnish to be what?
14,400 liters.
14,700 liters. So based on the question that material purchase budget in quantity and value. Material purchase budget in quantity. This is in quantity, right?
Yes.
What will be the value of wood to be purchased and varnish to be purchased? I mean, this is in quantity now. In quantity.
Is it not that $8 and $4 that is the standard cost of raw material?
And that cost it's
Is it not?
26
In value.
If I get it now, I will jump up.
You jump up. Okay, standard cost of raw materials. Yes. For wood is $8 and for varnish is $4. You can jump with Isa. Don't jump too much, sir. So that is it. So and you multiply this 26,300 by what?
8.
And you get the result in value as what?
$2,400.
Is it 2,400?
210,400.
Right. So in liters for varnish, multiply by what? By 4.
$4.
So you have what should be
58,800.
58,800. So that is what they want you to do. Any question? Any question?
No. If you are teaching this thing, it will be going smoothly.
Let it be going smoothly, sir.
It will be just be going smoothly. When you come back to it, the whole thing will be.
Don't let it change, sir. The point is that one of the concepts is try and read the question like 2 to 3 times before going back to it. Make meaning out of every sentence. Try to make meaning out of every sentence in the question. Interpret it in your own way. Then you now go back to it. Yes, when you go back to it, does not mean that you will get it perfectly at that first instance. Yes, there will be some hitches, but that does not mean you will not know it. You experience difficulties at the first instance. Yes, you beat your chest, I will overcome. And you go back again and solve. By the time you solve the question 1 or 2 times, you will become a champion in it. Yes, it does not mean that after the class now you pick it, immediately you get it perfectly. It might not work that way. Yes, you experience some issues, then on your own, you interpret again. Yes, these are concepts that will help you in the exams. These are characters or actions that you need to build up by yourself, and it will help you in the hall. When you see a line, a statement, you bring out the verb, the noun from that statement, and see how you can put that into use. So those are some of the things you need to imbibe as you practice. So when you see any question, you say, no, I must solve you. So that is the spirit. So now,
Sir, please, should we solve it accordingly from sales budget to material usage budget, then material purchase budget? Is it
yes,
accordingly?
it's sequential.
All right, sir.
When you see a question of this nature, it's sequential. That is why I've decided to come up with this illustration, that
Okay.
this is how it is. And that is why we say the principal budget factor is the sales budget. It's a determinant of every other budget.
Okay, sir. Thank you, sir.
Yes, ma'am. So the next is what? Labor budget. Labor budget in hours and in value. Labor budget in hours and in value. Who can guide us in doing this? Any guide? Just tell us something from what you've seen. What would determine your labor budget?
Are you produce?
Production. Is it a production?
The standard hours.
Fine, your production. Yes, that is
Standard
the first
hours
step.
per unit.
Yes,
With,
standard hours.
the unit produce.
Okay, by the unit produce. Okay, that is fine. So that is it. The
And
standard hours per unit
yes,
for X is what? It's 4.
4.
Your expected production is what? For X. It's 2,100.
2,100.
So 4 multiplied by 2,100. How many hours do you need?
I'm not seeing your screen. Are you just explaining?
Okay, is your network, sir?
8,004.
I think every other person can see my screen.
Okay, I can see it.
Yes. So we have it as labor budget. Labor budgets. Let's see what will happen here. labor budgets. We have, let's say we have product X. We have to produce how many units? 2,100 units.
100
And from the
multiplied
question, the hours is what? To produce 1 unit, standard hours per unit for X is 4, isn't it?
by 4.
For Y
Yes.
is 6, for Z. So we have 4 hours. How many hours in total? Should be
8,400.
400 hours. Now for Y, it will be what? 4,200 units. The hours is what? 6 hours. Overall, 25,200 hours.
25,000.
Then for Z, it's what? For Z, 3,100 by what? By 8 hours. The result will be what? Should be 8 times this times this. 24,800. 24,800 hours. So the total hours will be what? Total hours, you add up everything. 84 plus 25,200 plus 24. This
58,400.
58,400.
58,400 hours. The question does not stop at that point. They ask us to determine 2 things: labor budget, hours, and in value. What will be the value now?
Multiply by the rate.
What
Labor
is the
paid
rate?
at $3.
Aha. This is all the okay.
Okay.
Hey,
This one is interesting.
okay.
All right, so the labor budgets, this is in hours now. So in terms of rates, total labor rates will be what? 58,400 multiplied by what? $3. And the result will be what?
$175,200.
$175,200. So that is what the question wants us to do. How many of you take your time or took your time to check the question when I forwarded it?
I checked it.
I checked when I did only once.
Okay, were you able to make any meaning out of it as at then?
Now?
Okay. So I think this should make sense, right?
Yes.
All right. So there is a question. How many questions? Don't mind me. This is one of the questions we're going to solve in class. Ozigbondu, Nigeria Limited. I think it's May 2015. Ozigbondu. But don't go and start attempting it. You might get confused, please. So this question now, I believe you can see my screen. This question, you go and you solve it as an assignment. I'll forward it to the group. But can somebody read? Let's bring out some important issues, because I will not want anybody to fail it. I will not want anybody not to get it. So somebody should read, please. Let's bring out some vital points from this question. It's very simple once you can understand and interpret English language. So somebody should read, please.
It says budget for the first 5 months of 2015 is given for a particular production line manufactured by Kenechukwu Limited. Month says budget per unit: January 14,800, February 16,800, March 13,500, April 12,400, May 19,800 units. The inventory of finished products at the end of each month is to be equal to 25% of sales estimate for the next month. On January 1, there were 3,700 units of product on hand. There was no work in progress at end of any month. Each unit of product requires two types of material in the following quantities. Material S 4 units, material Y 5 units. Materials equal to 1/2 of the next month's requirements are to be on hand at the end of each month. This requirement was met on January 1, 2015. Required, prepare a budget showing the quantities of each type of materials to be purchased each month for the first quarter of 2015.
All right, thank you very much. Now, the first question I want to ask, how many months make a quarter?
3 months.
3 months.
You
3
said
months.
somebody is saying something else there.
It's 3 months.
Okay, it's 3 months. All right, I was thinking somebody will say it's 4 months. Though to get that quarter, a quarter refers to 1/4. 1/4. That is 1/4, right? So in terms of a year, 1/4 multiplied by 12 will give us how many months? 3 months. 3 months. Yeah, so most people, once they hear quarter, they quickly tell you it's 4 months. No, it's 3 months. It's 3 months. But for you to get that 3, it is 1/4. Yes, 1/4 of what you're trying to, of a fraction of a whole. Yes, of a whole sum. So another point in this question is the inventory of finished goods at the end of each month is to be equal to 25% of the sale estimate of the next month. It means that the closing stock in January or the opening stock in January, the inventory of finished product at the end of each month is to be equal to 25% of the sales estimate. Yes, it means the closing stock in January will be 25%. The closing stock in December, rather, please, in December will be 25% of the sales estimates in January. The closing stock in January will be 25% of the sales estimates in February. The closing stock in February will be 25% of the sales estimates in March. Get that, please. The inventory of finished products at the end of each month is to be equal to 25% of the sales estimates for the next month. It means when you are solving for January, the closing stock will be what? 25% of what? 16,800. Yes. That is the interpretation. Now, the point is this, that on 1st January, there were 3,700 units of product on hand. It means the closing stock in December 2014, was what? 3,700 units. That was the closing stock. So it will act as the opening stock in January, isn't it? It will act as the opening stock in January. In January. So with this simple explanation now, we should be able to solve. So each unit of the product requires 2 types of material. 2 types of material. That is material X and Y. So each unit for X, you need 4 units to produce 1 unit. For Y, you need 5 units to produce 1 unit. So this is simple. Once you can get your production budget, you should be able to solve for your material usage budget, material usage and purchase budget. So we are required to prepare a budget showing the quantities of each type of materials to be purchased. So you just need to produce to prepare your production budget and your material usage budget. Yes, material usage budget and purchase budgets for the first quarter for product X and for product Y. I think you should be able to solve this, right? Yes, we can solve it.
You should.
Yes.
Try.
Yes, let's try.
Okay.
Let's try. Yes, you can solve it, and you will solve it. Yes. So let's try. At least you can solve it before 10 p.m. and just send the answers to me. Yeah.
Okay.
Yes.
This one,
If you can't solve it, leave it till tomorrow morning and go through what we've done, please.
tomorrow morning.
I know you will leave it till tomorrow morning. Madam Noble will say that on now.
I'm always sending my assignment late.
Hey.
All right. So any question, please? And in case
That
you
Excuse me, sir.
in that
Yes.
question, there was a place they say 1/2 of something.
okay, 1/2. Yes, where is it? Let me go back there. 1/2. Where is it?
After material, X and Y.
Okay. Okay, yes. That materials equal to 1/2 of the month's requirements are to be on hand at the end of each month. It shows that 1/2 of the inventory for the next month will be the closing stock for the current month. Materials equal to 1/2. Material equal to 1/2 of the next month's requirement. Of the next month's requirement. It means that the closing stock for January will be what? Material equal to 1/2 of the next month's requirements are to be on hand at the end of each month. At the end of each month. So it means that what? In terms of material now, in terms of material, the closing stock for material, when you're solving for material budget, material usage now, the closing stock will be what? Will be what? Will be half of the next month of the current month requirements. Material equal to 1/2 of the next month requirements are to be on hand at the end of each month. So the next month requirement in terms of material usage budget should be the closing stock for the current month. For the current month. For the current month. So that is the interpretation. Materials equal to 1/2 of the next month's requirement. So the next month requirement, what will be the 1/2? So what is the meaning of 1/2? 1/2 is 1/2, which is the same thing as what? 0.5. 0.5. Fine, good. 0.5. 1/2. So let's try and solve and make attempts, and we'll see how it goes. So we'll continue next week. Tomorrow is for FM. So that will be that for this night.
Thank you, sir.
Thank you
Excuse me,
very
sir.
much.
This last,
Thank you, sir.
Yes.
the
Mr.
labor budget.
Yes, sir.
Let me just see your slide on the labor budget. The total hours. The last example we did.
This is it, sir.
That's 58,400 divided by 3.
Multiply by 3.
Multiply by 3, sir. Okay, sir.
Right.